All right, so let's get started. Good afternoon. I'm Deborah Rubin. I'm the CEO and founder of Tomorrow's Zone. We're a consulting firm innovating in the commercial equipment finance space, and we're building a virtual innovation community to drive industry level collaborations to shape the future of leasing and equipment finance. I'll be the moderator for today's panel. So we've got a really interesting topic today. Despite mainstream fintech adoption, financial literacy still remains a work in progress. From being stuck with large amounts of debt to saving too little for retirement, financial literacy is a significant concern in our country. And there seems to be little to no practical financial education built into traditional education systems. So many people are lacking the basics of smart financial decision making, from student loans to home mortgages to saving to investing. S&P's Global Financial Literacy Survey showed that sadly around 57% of US adults are considered financially illiterate. Or considered financially literate. So there's a lot of people who are lacking the skills and the know-how. With the rise of contactless payments, buy now, pay later programs, one-click shopping, it's easier than ever for uneducated consumers to get into serious trouble financially. So the question that we're gonna look at today is, how might we leverage technology innovation for good? Can innovative fintech applications inspire better financial behavior for consumers? And what are the possibilities for improving this situation? What's on the horizon? So our panel is going to explore how educational fintech tools are integrated into mobile banking, alternative finance, and peer-to-peer lending, and how they're improving knowledge about money and investing. So our panelists today are Bob Bilbrook, CEO at Capture, and Max Ukoprina, CEO at Float. And our agenda is pretty simple. I'm going to give Bob and Max each a chance to introduce themselves and the mission of their company and how they're providing solutions in this space. And then we're going to go to Bob for a look at what the latest trends are in fintech innovation, specifically for improving financial literacy. And then we'll take a look at what Max is doing with his company, Float. And then we'll talk a bit about what's on the horizon for fintech and financial literacy trends. If you have questions, I encourage you to add them in the Q&A, and let's get started. So over to Bob for fintech trends.
Yeah, just a short introduction of myself. My name is Bob Bilbrook. I'm CEO of B2 Group. B2 Group has multiple divisions within our company. Capture is one of those. The Capture division is a true consulting and strategy firm that's focused more on our small and medium-sized business partners. We also have a incubator and accelerator attached to our business called Startup Garage, and we incubate quite a few startups there. We have an extensive grant platform, but we also help those groups network with different capital entities, angels, seed investors, etc. So to start the session today, I wanted to give just an overview of fintech trends that we're seeing in 2021, 22. So we basically coined it, the future is automation, information, and security within this section of business. If you could turn, Deborah, thanks, up, go back a couple, maybe, maybe one more, there we go. So one ahead, please. Okay, thank you. The 6 trends that we're seeing in fintech, and these are pretty much cross the line, is autonomous finance, and I'll go over each of these, but I just wanted to highlight them each. Financial literacy, open banking, or what we're calling open banking, biometric security systems, digital-only banks, which really came into prominence during the COVID pandemic here, and then voice technologies as being kind of a specific technology to this fintech space. Next slide, please. So autonomous finance, what do we mean by this? So this automates the financial decision-making process with usually AI or some kind of machine learning. This is kind of a cutting edge area right now in fintech. And AI is really dominating and taking the place of some human being type interactions within banking. Next slide, please. Thank you. Financial literacy, and obviously Max can talk more about this because Float directly connects with some of these areas within financial literacy, but fintech solutions are effective tools for financial literacy. So with the collection of big data, consumers with bad finances can learn from those that have their finances in order, or solutions or apps that help with that learning curve, or to help in that automation of those processes for checking your credit and other things are, around this financial literacy space today. Next slide, please. And then open banking. Open banking gives third-party financial service providers access to consumer banking data via, an application programming interface usually. So it's APIs for investment purposes consented by the consumer. So a couple examples of this would be like Robinhood. And then there's some automated blockchain and crypto type applications today that also would, enhance the open banking system. Next slide. And then biometric security systems. We've been working a lot in this space personally through B2 Group and Capture. So incorporating biometric sensors, mobile banking can elevate security protocols without making things any less inconvenient for the user. So an example of this would be not only a fingerprint scan, but some kind of voice recognition and also some kind of location. So those three factors we believe gives complete authentication to a purchase these days. It could be anything from an automated cash machine that does those things without a card or some other physical thing that could be a security breach, but also could be anything from like just going to a store like Nordstrom and actually purchasing something and having those 3 points of authentication to actually make that purchase more security friendly. Next slide, please. And then, digital only banks. We saw a lot of this go during COVID because of people not wanting to touch money, because people not leaving their homes to purchase goods. But, the total eradication of physical contacts for banking transactions seemed far-fetched before the pandemic, but accessing funds virtually became a survival need that conventional banks could not meet completely. Another piece of this is kind of the last mile delivery businesses also, not only on like food, pharmaceuticals, like any of our basic needs that kind of had to be fronted to our house during the COVID pandemic, because stores, restaurants, and other areas that we're used to doing physical business in were kind of closed and not available. So digital only banks are becoming quite prominent in fintech. Next slide, please. And then voice technology. This is a big one because, as I mentioned in the previous biometric data slide, it kind of goes together with not only the biometric data, the voice enhancement or voice authorization security features, but also location coupled with that. And voice is pretty much a needed, an advancing technology that's taking prominence throughout all these solutions just for the security factor, but also for the convenience factor within a lot of these fintech solutions. So that's kind of our overview. That's kind of our killer 6 for 21, 22 that we see in the fintech space. And I'll now turn the floor over to Max for introduction of Float.
Thanks, Bob. Max Zuckerpina, founder and CEO of Float. So quick introduction on myself. I've been in personal finance and neobank fintech for a number of years. Prior to starting my company, I ran partnerships for Acorns for a number of years, from 0 to several million customers. So I saw firsthand how revolutionary of a time we live in of people actually, getting the tools they finally need to have financial wellness. So yeah, on to Float. We are the credit app for couples. We're on Android, iOS, go check it out. Join thousands of other people and couples that are keeping track of their credit, all within a beautiful, elegant solution. And there's no one else in the business that's actually, you can give consent for someone else to not only check your credit, but keep track of it in nearly real time. So we're very proud of our product, and we're there to help couples make better financial decisions. Next slide, please.
Jake, babe,
What?
can I see yours?
What was that?
It's been months. I think it's kind of weird that I haven't seen it.
Fine. But if you promise not to judge.
Babe, you think I would judge yours? If we work together, we can make it bigger.
I think it's fair if you show me yours too then.
I'm not afraid of that. Mine's massive.
Really?
Yeah,
Let's
really.
see.
Okay, all right. See?
All right. Wow.
Right?
Looks good.
So that's one of our commercials, but it's very cheeky, but it proves one thing that, you know, for a lot of people, the first time they actually communicate with their partner is typically an awkward one. Most people are pretty embarrassed, and we're having a study come out soon with Harris Poll and Op Loans that shows that. But it's an awkward conversation that only happens right when they apply for their first apartment or their mortgage, and then they find out one's in terrible debt and they miss out on that dream home, and then there's embarrassment, resentment. It's no wonder why, you know, number 2 reason for divorce in this country is finance. So we want to eliminate, you know, an uncomfortable situation and have these people live better financial lives, because, you know, most adults are in a couple or in a relationship. They don't make financial decisions in a vacuum, and they would like to if they could, especially when their finances are together. And even now, there's a trend to keep finances separate. A dollar in may be different, but a dollar out for different debts and credit stuff is not the same. It's really interesting on the data piece. So a couple could be married for 70 years, and the credit bureaus don't know who's coupled up or married. They have a very rich data set, but on that end, it's very dumb. Like, you can see that, you know, John has a mortgage, Jane has a mortgage, but they don't know that they're cohabitating, let alone sharing that loan, which has a whole new implications for credit underwriting and creditworthiness. Next slide, please. Yeah, so here's how we work. You know, it's all based on consent. Consumers control their data, and that's what we found in the law, and we saw that as an opportunity for us to help people out. And with it, they can keep track of each other, and then we help them get into better loans, new loans, and also improve their credit together instead of, next slide, are the other people in the space. Consider everyone to be on their own financial ship floating in the night, and not connected. So we're there to help people with real solutions instead of just treating them as if they're an independent person in life. Next slide, please. And again, so what I talked about before with the credit bureaus not knowing, you know, who's together, is that the hypothesis is that people together are more creditworthy than they are apart, right? If John has terrible credit and Jane does, they start linking together. He's going to start reflecting her and move up that line. And this is all proprietary that we have. Next slide, please. So here's just showing you, visualizing how we can dedupe and de-risk that and actually show people as more creditworthy together. Just like if John and Jane on their credit report have, you know, $470,000 in debt and $530,000 in debt separately, together they only have $550. Next slide. So we had some really exciting news come out in the last week or so. Fannie Mae announced that now with the loans that they're going to be bundling, they're taking 2 co-borrowers' scores and averaging them. Before, they would take the lower of the person who has the lower credit score and accept them there. But that's denying, obviously, people. And they're slowly realizing that, again, the hypothesis is true, that people together are worth more together than apart. And so we're here to bring that solution, and we're the only ones there to help folks. So we're really excited about it. That's it. Go check us out. Go to our website. We're on iOS and Android, and share it with your partner. That's it. Thank you.
Awesome. Thanks, Max. Apologize for the delay here. I'm trying to find the mute button. I was on double secret mute. So you guys are working on some pretty exciting stuff in the fintech space. So love to talk a bit more about the problems that you're seeing around financial literacy and what you're seeing in the trends for addressing those problems. And Bob, I wonder if you could elaborate a bit more on one of the fintech trends that you shared about earlier in the financial literacy space. What sort of solutions are you seeing? So we saw, Max is really zeroing in on a very specific problem and, in how couples are managing their credit rating. But what are you seeing?
Yeah. So one of the figures I saw when I was preparing for this panel today was 55% of the American population is not considered to be financially literate. In fact, many of them are living what they call paycheck to paycheck. So I think a lot of not only government agencies, but also private industry, like groups like Float and others that are trying to put application, education, and all these factors together to actually get people started quite more early in life, than they, than on how to manage their finances and how to manage their money, because a big piece of that. And honestly, I think that's why for a lot of people, Robinhood and some of these other trading platforms and things like that have really taken off because I think people feel like they're actually getting educated by those platforms a little bit, and also that they have more control of their money than just sticking in the bank and getting, a minimal return on their money. They feel like they're actually growing their money. And especially the younger generations, the millennials, the Gen Y and the Gen Z, and in some regard, Gen X is a little bit late to the game, but we're learning also and getting more financially literate. So I think a lot of the education programs, and I think also pushing that along are groups like, the Small Business Administration, other groups that are not only advancing entrepreneurship, but also advancing financial literacy among individuals also.
Yeah, it's, I think clearly we're in a turning point when people realize that personal finance should be taught at a very young age. We used to have home ec back in the day in the United States, and we've completely turned the other way. But now, with these great fintech apps, Float included, and Acorns and all these other neobanks, they're realizing that, now I'm signing you up for a card, or now I'm giving you an investment account. It's the first time most Americans are doing that in their lives, right? And it's super exciting. We're giving ownership to a lot of people, but every single time that happens, it's an education piece. And it's great to see companies step up to fill that void. We talk about school and parents, but most people are pretty embarrassed at some point of their financial lives and don't want to talk about it. And so it's great to see these, fintech companies and neobanks, stepping up to the plate. And
you brought up an interesting thought, Max. You were talking about the awkwardness of having these financial conversations. And I'm just wondering, what sort of results are you seeing for the people that have downloaded and started to use your app to improve that situation?
Yeah, totally. So, nowadays, people are getting married much later in life, right? They're not getting married at 18 out of high school or just after college, where they didn't have time to make poor financial decisions, right? Or good ones. And so with that, when people are moving in together, getting married, again, they have to kind of open up their closet, if you will, and show what great things they have, good, bad debts, what it is. And, with Float, we've been able to help those conversations happen with just transparency and, being a single place for people to go where they can, open up their, financial lives in a very positive way. Like, we don't want this to be a negative experience, and we've made sure to keep it light in a very serious manner. And we've helped couples, again, live happier lives just because there's that transparency, right? It's a very good thing. And we want people to improve their credit together underneath the same roof, because by keeping it separate, the longer you keep it separate, the longer you deal with it yourself, the more debt you're going to have as a family. If Jane has credit card debt and John has student loan debt, and they just completely pay off those separately, they could have done a lot better if they had focused on that credit card debt. So it's these simple things that people aren't taught, and then tools like us are stepping in to lead them in the right direction. So
the other thing is the technology is filling the gaps a little bit. Also, you have a lot more AI powered machine to machine and stuff like that. So a lot of the post, back in the older days, like thinking that people had to put into their finances, today a lot of that is artificial intelligence powered. There's a lot of platforms out there that are intelligently taking data and putting in an order that not only needs little human interaction, but actually helps them improve their finances drastically just through machine learning and other things. So the technology gap has really come a long ways also, where the human doesn't have to do that much thinking about their finances anymore. The term we see all the time is just finance, set it and forget it. It's not totally there yet, but it is getting better. And actually a lot of people have AI powered portfolios today, and they've been outperforming the market on the actual traders. So we're seeing more and more of that too.
I'm going to answer a quick question from Jennifer. So when you merge your credit as a couple, and if, let's just say, God forbid, you get divorced or separate, it's all based on consent. So it's your data. And so it's a single click and you can sever it. Hopefully it never happens, but it's very simple.
That was a good question. So Bob, sorry. So Max's app is very focused on a specific niche. And I wonder, what are you seeing as you're looking at these trends? What other niche solutions are out there in the fintech financial literacy space?
I think a lot on the trading side, because of platforms that are helping people trade more. So the stock market used to be a place where white guys with suits went down to the street called Wall Street, and they did trading, and it was really linear as far as involvement and inclusion and all kinds of stuff that is improving day by day now. So I think a lot of these platforms are not only creating more inclusion in that marketplace and more money into that marketplace, but now are doing more educational tools to make sure that people understand it more also. So I know Robinhood and a lot of these trading platforms, we do some stuff in like Reg CF for small business. So regulation, crowdfunding, and some of the things that people are doing around that to raise money for their small and medium-sized businesses, which, capitalization is always important. There's a ton of educational processes going on within those platforms also to make sure that people understand what's an interest rate, what's a return on investment, all these basic terms that to some of us guys and gals in finance kind of is like a secondary thing, right? But to most people, to the Joe Paycheck, that's not a term that that most people know. So I think just the educational part of it, and a lot of those tools are AI based today. I mean, artificial intelligently based, so that they feed off each other and then get smarter and smarter as the process go on. So I know a lot of these platforms are actually learning on their own from the questions that people ask or the feedback that they're getting provided through these processes and through these apps and these platforms. So I think the power of the people, the questions they ask, the interactions they're having with those systems and platforms are making those systems and platforms even better through the AI powered technologies.
Speaking of good questions, I did find some questions in the Q&A from our audience. So you had mentioned, Bob, voice as one of the technologies that's coming to the fore in this space. And so the question I'm seeing, how do VPAs like Google Home and Alexa play in the voice technology stack?
Yeah, so we do a lot of stuff in connected home, and we have for a long time, over the last 16 years here. And my career actually started within connected home because I was a product manager with Leviton Telecom for a long time. But we see more and more. And seamless technology is what I call it. And when I say seamless technology is when I can go from my car to my home, to my office, to my gym, to wherever I'm going, and not have any different interface that I have to interface with. The beauty of that today is voice. A lot of that, and it's not perfect. We've all gotten our car and said, oh, hey, hold on, I'm pairing my Bluetooth. Sorry for the road noise and all the stuff. It's not perfect today yet, right? But it's someday in the near future, within, I would say, the next 6 months to a year, a lot of those technologies will be perfect. And as you start looking at connected car, connected home, connected office, all this stuff, it moves from seamlessly, almost like a play, changing stages. It moves seamlessly from one stage to the next set, to the next set, to the next set in your life. If I'm at the beach, I should be able to do any function that I can in my home or in my office. And a couple of things are driving that. Technologies like voice, technologies like biometrics, but mostly one of the things is speed. 5G has now almost eliminated latency. So as those networks build out more and more with 5G, it was funny because we were actually talking to a client the other day and we were talking about speeds of 5G versus, say, like home Wi-Fi. And they are absolutely blown away of that. Home Wi-Fi is like 100 times slower than 5G, so people are just amazed by the speed of 5G, and there will be no latency. Gaming, communications, location is a big piece of that, because in the past, location was done, through tower location and stuff like that. With 5G, it'll be able to locate within meters, if not, inches and meters of people. So those technologies will get stronger, and voice is a big piece of that. And voice seems to be the common denominator with everybody. It's like, this QR code behind me here in my office. Soon we'll be able to do just voice to QR or QR to voice, and all these other functions that will give people these services on demand by using, just their voice for that. So I think that's a big piece of it.
Yeah, it's pretty exciting to think about it. I think about Ready Player One and the seamless movement between the digital and the real world because of the advances in technology. So Max, does voice play a role in what you're doing or where you're going yet?
Not at the moment, but as Bob said, it's definitely on the product, timeline. Being able to ask Alexa how your family's debt is going is pretty cool, right? And it'd be super helpful. But we're not there yet. So.
Or like you go to make a purchase and Alexa's like, nah, probably shouldn't be doing that.
Yeah, you say, hey, Amazon ordered me, a new TV, and then someone steps in and goes, no, maybe you shouldn't.
Yeah, that's going to do some ugly things to your credit score. We have another question in the chat that I'll throw out to both of you. Can you create, or does it exist, a white label mobile bank? My organization may be perfect to create for mobile bank. We would prefer using existing technology and just market to our customers. So white label mobile bank concept.
There are plenty of options. So when we started Acorns, or when the founders started Acorns, they built it all themselves. And that was their key advantage, and it still is. But yeah, in the last several years, a lot of players have entered a space with white label everything, white label credit cards, white label debit cards, things that can help you open, essentially a shadow brokerage in your app, whatever. So yeah, there's a lot of other white label stuff, which could be a totally different panel or even conference. So
there's a couple real-time examples I give you. One is, and this is pretty well known among everybody, is like GoDaddy just launched their own e-commerce payment system, right? And they're basically doing that with the help of some big banks. But in the future, I think the reason they're really going that strategy is because in the future, when there's full staking through blockchain and cryptocurrencies, and they end up be able to take that kind of money into their organization, that becomes that much easier. You don't need the bank function at that point when you do full crypto blockchain. A lot of groups are looking at that. Another one is we're building marketplaces for major e-commerce players right now. I won't mention their names on this panel, but they are all doing their own banking systems within that. The reason why is because of the marginal rate that they can make from each consumer. So if you look at somebody, let's just take Amazon, and who I'm talking about is not Amazon, but let's take Amazon for an example. Amazon probably gets, I would guess, about 16 million unique views a day. They probably do triple that in transactions a day. And if you think about, if they just take an extra 50 cents per transaction for just doing those transactions per day, I mean, that's in the hundreds of millions of dollars that they're making just off of doing their own transactions. So that's the compelling part of cryptocurrencies and blockchain for these bigger organizations to cut out, the bigger players in the space that have kind of dominated the space with some of these merchant services and other things like that. And you see more and more of it. You see more and more of these payment companies take place. And I know PayPal and others are working on solutions and have some rudimentary solutions in those spaces now. But when you look at the marginal value of getting an extra 1% off the transaction to take it into your own bank instead of giving it away to a bank, it becomes pretty compelling to do your own transactions.
That's fascinating, but also something for, banks to think about. Your competition is not your traditional competition anymore, and into the future, it's going to look very different.
Well, I touched on
players getting into it. Pardon?
Yeah, I touched on my opening slides, the open banking system. That's really what it's about. When we start talking open banking, it's these API transactions that are making this operational cost lessen, and then also increasing margins within that open banking system. And banks see it. I think banks see it, the Goldman Sachs, JP Morgans of the world, these groups are opening their systems up. I was going to mention it on the previous thing when we talked about voice, like saying, Alexa, what's my finances, things like that. The only holdback in a lot of those systems today is the ability for Google to open that so-called walled garden. I mean, us old guys from the old mobile days remember the deck of your phone. You used to have a deck of your phone, and like Verizon would never let anybody put an app on there unless they fully approved it, yada, yada, yada. The same thing's happening to a certain extent in some of these connected home processes and apps today. You have a lot of walled gardens. You have Google, you have Apple, you have Samsung and some of these guys, and they're really protecting their ground because they know it's super valuable. Now, Apple's started to open that up a little bit, but they've done it for obviously reasons that benefit them. But when we get a true open system where people can do apps, where they can do exchanges of data, exchanges of money, things like that, then the system becomes that much stronger for the consumer and for the small, medium, and even enterprise-sized business at that point.
Yeah, the democratization is amazing. It's all this competition that people are going after the traditional financial institutions. It's going to be a bloodbath, but the only person that's going to benefit, or the only people at the end of it, are going to be a few companies, but all the consumers, right? And this is not just the United States. You have true ownership being made in savings, checking, and especially investing for third world emerging countries. Like, this is super exciting stuff. Like, you want to talk about freedom, like, it comes from ownership. And most people are unbanked and have been in cash only across the world, but they all have cell phones, and that is going to give freedom across the world. And you think about, in our tiny little our story, we had to beg the bureaus to do this just because we saw a huge opportunity, and they're on this totally old model, right? And they said, if it ain't broke, don't fix it. We're like, we don't need to fix something. We need to create something to go after a very big market. And that's proof in our success.
And I think Max brings up a huge point, because I just participated in the Draper Goren Holmes DeFi conference, and that's all it's about. I mean, when you look at like the Fed and what they have planned for like how they're going to approach cryptocurrencies and things like that, they want to do a new technology in an old system. Nobody's interested in that. Let's just call it what it is. DeFi is the only way to give freedom to the consumer to control their own finances, their own monetary, way that they transact monetary payments, and transactions with friend, family, or foe. So this is huge. I mean, this is the biggest probably topic in the market right now, is decentralization, DeFi versus, what's in place today. And I think that's why a lot of people have a hard time supporting Ethereum versus like say Bitcoin. And then the transactions, obviously a lot of people formulate side chains and other things that go away from the main chain of the blockchain to do these transactions quickly because blockchain is synonymously slow. So, those are the things that need to be worked through for the technology side. But DeFi is definitely one of the biggest topics today and is going to stay top of everybody's mind because DeFi is freedom. Everything else is just controlled by the same banking, cartels that are in place today.
So, you're talking about a lot of interesting new technologies and the intersection between technology and finance and the things that are starting to be possible. What do you see on the horizon, and what would be some new opportunities for financial literacy applications? Because as you talking about, people trying to understand Ethereum and crypto and Bitcoin and how do I get involved in this? And it has this whole new language that a lot of people have no idea what you're talking about, blah, 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 Bitcoin. So, it seems like there are a lot of new opportunities for financial literacy innovations in fintech. Any thoughts on that?
Yeah. So Bitcoin and cryptocurrencies are huge, and that's going to be fantastic for countless reasons. But you think about most financial transactions that happen, they're still very archaic, pen and paper, and they involve, soft skills from salespeople or brokers or whatnot, which ultimately can be good for the consumer, but most of the time it's not. It's adding more time, more costs, and they're unable to see all their options. And so across the board, we're attacking mortgage, car loans, but you have, credit is obviously going to be great, but all these neobanks doing investment and checking and cards, and I see real estate as being a huge opportunity. There's, talk about archaic there and pen and paper, that needs to be changed, but it all will be. And again, as I mentioned, internationally, you take a working American product and most likely it'll work abroad, right? And probably at a higher adoption rate just because they've never had access to this and now they have their cell phone. Everything needs to be fixed. Again, just because these financial institutions, the big banks, are making a killing off of not changing for years. And of course, now they're coming around and their hands are being forced, which is fantastic, right?
Yeah, well, and that is a very status quo mindset. If it ain't broke, don't fix it. And, it doesn't matter if it's broke or not.
Right.
It's about de-risking the system, de-risking, right? There's a reason why insurance companies do actuary tables and why we want to pull in all this data and why we pull data sets from everywhere today. And we try to make sense of the actuary tables and what that means. It's all about de-risking transactions, de-risking investment. Everything is about de-risk these days. So when you take a look at the blockchain technologies, when you have staking involved in the process, staking takes away all the power of the banks because at that point, de-risk is not a piece of the equation anymore. Staking actually says this person has $10 and I'm buying some for $10 over here. And the staking process in that, which takes away the human element completely, handles all that. So when we get to that point in all transactions, then there's going to be a whole huge, earthquake, 9.0 earthquake shift of dynamics in the financial markets around this. And the only reason it hasn't accelerated faster than it has now is because there's big players that have a lot of money invested in the other side of the trade right now, and they are transitioning. We see it rapidly. And a big piece of that is what the central banks around the world are going to do. Is the Fed going to create their own electronic system to make all money transactions? I think it's on its way there. I mean, paper money is kind of a dumb idea. I mean, not only is it dirty, but it's kind of hard to track and take care of and everything. So electronic transactions make sense, right? And we do it already today. When you look at how much people pay with actual dollars out of their pocket versus what they pay with their credit card, which is an electronic transaction, it's the same process. So having it paid, in a crypto type currency type situation, it's just like using your credit card. And then we get back to dynamic we were talking about, the voice, fingerprint, location, we can use all these wonderful technology tools to actually make it where I don't even have to carry a wallet anymore, so that's where I think we want to go.
Yeah, you see, it's great to see, these impoverished countries in Africa adopt, or in South America, excuse me, is it Nicaragua? They adopted Bitcoin for their currency just because it works better, right? I mean, that's where you're going to see a lot of innovation. I talked about copying American companies, but I'm buddies with lenders in Mexico and Southeast Asia, and they don't have the benefit of data, right? Everyone's completely unbanked, and so they're using the data they have, right? Does Jose charge his phone at night? How are his friends? Does his friend that's on our lending platform vouch for him? And so these things are just other data pieces, which some people are realizing that alt data is actually a better indicator of creditworthiness or whatever you want to call it than what we have. And so,
it's actually funny because you mentioned that, because if you look at the other paradigm, like China, I can't go anywhere in China without purchasing something that looks like this behind me. Everything is QR code, and it's all trackable, and that's exactly what they're doing. And the reason why is because they're a communist country, and that's what they're doing, tracking transactions. They want to know what people are doing. Now, we live in a free market enterprise, and America is a free country, so we don't do that. So, but you got to ask the question, are we being counterproductive about the way we're doing transactions and the way that we're checking credit and other things? Yes, we could probably come a quantum leap forward, and not China-ize it completely, but actually get more operational margins in there, because it's not a human factor being needed in there to transact that transaction or to do, that credit check or whatever it is. So I think we'd be smarter about that.
Exactly. Like China, the CCP, they want all the data so they can control people. But us fintechs, luckily, like our platform is built completely on consent, right? You can't do anything unless you absolutely know what's going on. And that's going to continue to be the trend of, I know where my data is going, right? I approve of this, I have approved it, and I can revoke it at any time. So luckily, like you said, in the free world, I'm very optimistic about the free world, and where we don't have to decide on a little convenience for a little bit of my privacy.
That's a delicate balance for the future, is, efficiency and convenience that's data driven, balanced with our desire for privacy and ownership of our data. So a lot of amazing new possibilities for the future, and a lot for people to think about, as to how they interact with these technologies as they're becoming more mainstream.
And you have a lot of really big, really profitable companies that make a lot of money off that data today. So
Yeah.
that's a hard fight to go battle, you know what I mean? And it's going to change. It's going to change because the consumer ultimately has the power. So where they want to do business is going to ultimately control the market. And that's why we see a lot of dynamic shifts within business models, and also, data and privacy. And I think Apple is trying to lead there a little bit, which is good. And since they have, most of the phones in most of the people's hands in the United States today, outside all the Android ones, that's probably a good company to probably try to tackle that challenge.
Yeah. Well, we're going to wrap it up. Lots of amazing new possibilities in fintech, lots of new business model possibilities at the intersection of all of these different technologies that are moving forward so fast. Max and Bob, thank you so much for sharing with us today. And thanks to our audience for engaging. Great questions. And I hope you enjoy the rest of the event. Have an amazing afternoon.
Thank you, guys.
Check out Float today.
Awesome.
Thanks, guys.